Time for a quarterly chat with the top management of TCS, India's biggest IT company. And I have with me the CFO and head of HR. Gentlemen, slightly late, but Happy New Year. Thank you for joining us. Ramki, from last 2 quarters, every time I've looked at the TCS numbers, the wow factor is missing. You'll defend back by saying, look, I'm still growing. But my argument is that if I do a relative comparison, others are saying they are coming back. TCS is saying I'm slowing down. Last 2 quarters, what has bothered you that you suddenly have slipped a bit from where you were, let's say, at the beginning of the year?
I think from a strategy perspective, we are very focused and we are very consistent with what we are doing. The strategy is essentially to build capabilities in cutting edge technologies at scale and get our own teams very focused on getting the skills themselves, also on adoption of agile technologies in a big way, which helps our clients significantly, as well as drives a lot of efficiency into the process, and also building the intellectual property around our products, our platforms, and sales led on the whole portfolio of services. So all these enablers, we are very focused, and there is no movement from there. There is no movement away from that. Now, performance will be also in a short term, will be also factored in by what happens in different sectors and different geographies. In the medium and long term, we stay very bullish on the prospects for this industry and prospects for what we are doing in particular, because on multiple fronts, our strategy is geared towards where we can participate in the growth and transformation agendas of our customers, and we are increasingly doing that. In the short term, it is more buffeted by what happens with a particular sector, and we have been talking about a little softness in both the BFSI and retail, again more pockets rather than across broad-based, and so we are seeing that continuing. So that is where you'll have to look at it. It's difficult to do a relative comparison with others because each is in a different trajectory or their own strategies on organic versus inorganic is also a little different. But I think staying focused on ourselves, when we look at some of these sectors, it is more confined to either a certain geography or a certain subsegment within those. But these are big sectors. And that's why we are seeing a slightly lower growth than what we ourselves targeted, what we expected, and what market participants also look at from us.
So how will you soothe the nerves of the market? Because when we started the financial year, or the current financial year, it was almost given that 10% growth for TCS or double-digit growth for TCS would happen. Now it would be difficult for you to grow at 10% looking at what your exit rate is and what you're indicating for the current quarter. When do you think growth will come back? How much of the slowdown is cyclical? How much of that is structural?
So I think, yes, you're right. Double-digit growth in this financial year is probably not there at all with where we are. But I think if you look at the deal wins, right, and the TCV in each quarter, that has been significant. That has not slowed down. In the last 3 quarters, we have added about 18 billion of deal sign. So that is an important metric. We also, if you break it down into some of our services and also on the platforms, or things like Ignio or in the banks. So one has to disaggregate and look at where the core strength of the organization lies. And that is in the technology space, and a technology agnostic or a platform agnostic where you can participate and create the solutions for your customers and help them in their growth and transformation. So that is where the strength lies. And so one has to not be just looking at while those are very important, the short-term numbers are very important. But as I said, they are more specific to isolated pockets but they are impactful in that sense.
There is a change in the headcount number, 4,000. It's not a large number on that large base, but I just want to understand what is that number all about.
So if you look at last 3 quarters, right, our headcount increase is about 22,400. And if you compare it with the last 3 quarters, it is similar. So it is actually just a distribution of the 22,400 across 3 quarters is different this year compared to last year. There is no material change otherwise.
The attrition rate normally is not settled. I mean, 10 to 12 is where the band is. Will it settle there now for this year?
Actually, if you look at attrition rate, our absolute number on attrition is even less than the Q1 attrition number. Absolute number. The number looks higher because the denominator is lower. Okay, that is the reason. So I'm not worried about that at all.
This slowdown will not impact any of your hiring plans for the coming year?
Absolutely not. Absolutely not. We actually have offered 39,000 offers through our TNQT this year already. So that reflects on our what is talked about medium and longer term. Our basically the fact that it will grow will happen as a result of that, and we are basically already made an investment towards that.
Ramki, I won't get into this quarter. Let's not talk about the coming quarter. I'll take the clock back 10 years. 10 years, Ramki, trust me. Journalists never take the clock 10 years back. I'll do it right now. In last 10 years, the rupee has depreciated by more than 50%. That's been a serious tailwind for IT companies. Now, I don't know what happens to rupee in this decade, but if one works with an assumption that rupee remains stable for this quarter, then what happens to margins for TCS?
I think initially you said not on this quarter, but I think one has to look at.
No, I'm talking about the structurally.
Yeah, but I think one should not look at it just purely as a tailwind or headwind. A rupee depreciation is intrinsic to our model. I think we have explained it in past interactions as well. Because we primarily serve customers in multiple markets where the inflation is very benign. And whereas we serve from markets or serve from geographies where the inflation is much higher, right? And so, which means, and in the geographies where you serve with the customer base, your pricing is to some extent linked to the inflation in those countries. So, which means your cost will go up in line with inflation in the countries where you're operating from and we are servicing from. Largely, I mean, there would be exceptions.
That's a basic thumb rule, yeah.
So that difference has to be made up by currency depreciation. So one should not look at it, okay, if currency is depreciated by 50%, that 50% is directly dropping down to your bottom line. And one should strip away that and then look at the core performance. I think that's a little fallacy because that 50% or whatever that number is actually helping you to make sure that your cost structures are met. So if there is a mismatch, there will be mismatches. It cannot be a perfect set in every quarter. So there will be, but on a long-term basis, on an overall basis, I think currency is just one more factor into that. But on a short term, on a quarter to quarter or on a half yearly basis, etc., you will have those gyrations driven by currency as well.
Okay. My next immediate question would be that let's talk about the India business. Small business, but A, there has been an economic slowdown. B, there has been a disruption in the financial space in India. And now telecom is the latest challenge. Could that start impacting your profitability, your India business currently and for the next one more quarter?
Actually, our India business is no longer small by that. I think in absolute terms, it's a very healthy number. And many large programs are being run by the government across multiple dimensions. And we are participating in many of them from that perspective. Apart from that, large corporates are also engaging on the growth and transformation, while also they are engaged in cost optimization. So we engage with them as well. Of course, it is sectoral. In fact, if some of the sectors are challenged, actually technology is an enabler for them to tide over those economic challenges as well. So we continue to be very focused and we participate in this. From a profitability perspective, while I can't share specific numbers, we have significantly improved in our domestic business over the years.
So there is no stress in the domestic business given what's happening to the economy.
Absolutely.
Okay, that perhaps
Yes,
was my question.
Right, that's right.
Are there any significant levers which are going to be at play in coming quarters on the employee front? I know it's work in progress. You're always innovating on it. But sometimes you read a J curve. For example, a J curve for TCS came when you were able to train your workforce which migrated to digital. That boosted your margins. Next 3-4 quarters, is there anything significant on the utilization front, productivity front which could surprise us?
So I think I will not specifically talk about utilization or productivity, but I'll tell you, the fact is we have already offered, like I said, 39,000 offers already given. So we will, spread it out the way we have done it last year. Are we going to do it the same way this year? We are going to decide it in a month or so on how we are going to do this. So that aspect will remain same. We'll continue to basically do two things. We'll continue to basically build our base, continue to increase our base, and we need continue to reskill our middle management so that we can deal with that pyramid on an ongoing basis. That would be the theme, not just for next quarter or 2 quarters. It will be a theme for next foreseeable future, I would say.
Brexit and US elections, 2 factors which would be at play. Should we expect volatility because of these 2 events?
Brexit, some level of uncertainty had crept into some of the decision making with clients. So, but I think the signals are clear. At least the uncertainty factor around Brexit is now easing up. But of course, the nuts and bolts of it will be actually ironed out over the next 10 to 12 months. So that is very important. What implications does it have for clients and their own strategies in terms of how they manage their supply chain and stuff like that? Plus also whether it has implications, I think one has to wait and watch. But US elections, etc., we are not seeing anything to call out from this perspective, from a demand perspective right now.
Well, gentlemen, appreciate your time. Thank you for joining us, and thank you for walking us through your quarterly numbers. Good luck, and hope to see a stronger comeback than TCS. I was anticipating a stronger comeback this quarter, but like Chanda used to always say that it's not a sprint, it's a marathon.
Absolutely.
So TCS is running a marathon.
Right.
So good luck, and thank you for joining us.
Thank you.
All right, thanks for staying with us. You're watching Earning Calls live on ET Now. We're in conversation with the top management of TCS, Angie and Rajesh. They both join us now. Gentlemen, thank you for joining us. I asked Ramki that the wow factor this time was missing. How many quarters more will it take for me to say, Rajesh, the wow factor is back?
Come on, the wow factor is there in the margins. So if you look back, just 2 quarters back, we ended the year at 11.5%. We started the year fairly strongly, and then into Q2, and in line with the rest of the overall market, we said there is unexpected softness in demand, and that we think that the near term is going to be challenging. And so Q3 has kind of played out along the same lines. We had spoken about the weakness in the BFSI space, and that's also playing out. Where we are today, we think that this trend is likely to continue for a quarter or so. But we think that the medium term, the indications are that there will be a recovery on way unless something else comes and completely derails it. The most important thing from a company strategy perspective is, are we gaining market share or are we losing market share? Are we winning and are we relevant to the space, or are we losing relevance? And on those 2 counts, we are doing very well. So even if you take the most stressed vertical BFSI, and if you take over the 7-quarter period from Q1 19 to now, we have gained market share across all the top 6 players. So that is the measure, because the rest of it you have to roll with the changes as it comes. But if you're gaining market share, that means you're staying relevant. And if your new deal wins are good, that means you're participating in what is new and what is current for the customer. And that is what I think the focus is. And the rest of it, you have to have the ability to stay invested. You have the ability to stay focused on the future, and the growth will come. So that's where we are, the way we are looking at it.
When you say that softness will remain for a quarter or so? Let's be specific here. What is your definition of quarter and so? Q4 and recovery, or Q4 plus
let
Q
me
plus
be
one recovery?
very honest. I have no looking glass to say that this is. I'm reflecting, saying, is there a logical reason why they should not exist? We don't think so. Again, as I said, we are very well positioned. We are well entrenched. When we talk to our customers, they are not. I mean, this is not like it was 3-4 years back, where they had no clue where the bottom is. This softness is an unexpected softness. A lot of it has come externally. Nobody expected this uncertainty. So it's very difficult for us to call where it is. Today, it doesn't look like this one has, when the weakness has momentum, therefore the turn should come. Beyond that, I don't think we are in a position to actually say whether it is 1 or 2. But I would think 1, 2, 3, not more than that. So calendar year 2020 should be better than the trend that we're seeing.
Okay. In 2017, I distinctly remember, NGS, when we spoke about double-digit growth, the answer I got from the top management was that the ambition is to give back to double-digit growth. You've achieved that already. So can I say that for 2020, it is a possibility, or it will be an ambition, and it will be a lot of hard work to come back to double-digit growth?
I think the opportunity is there.
It is not impossible.
It is not impossible. I think as a management team, we are laser focused in achieving that double digit and staying there, right? And there are certain market developments and the softness which was quite unexpected, which led us to where we are today. But as Rajesh articulated, the kind of relevance that we have, right? The kind of relationships that we have, the most complete offering set that we have, all that means that I think, we are doing the right level of strategy. Our strategy is extremely relevant. Our executions are on track. So I don't see any reason why we shouldn't get back into the double-digit growth. And I think wish us well, right?
No, I'm sure you will come back, and I'm sure the margins is just one part of the good story. Now, Rajesh, I'll take a leap from that very strong remark, which is that you expect that the coming year will be better than the current year, right? It's a very strong comment, and that I think is only guidance which we'll get in the course of this conversation.
But don't overread into it. Let me go further from where NGS said. As a team, now we are focused on getting back to double digit in BFSI and retail.
Even in BFSI, you can go back to double digit.
We absolutely believe so, and we are focused on getting back to BFSI and retail double digit.
Okay.
What does it take? How long will it take? We don't
today
have an ability to do it, but that's where the focus is, and we believe that it is possible.
Okay. Do you expect the quality of earnings will improve across the board? Digital migration, margins will remain. So one is growth, which is we look at top line.
Absolutely.
There the attempt is to go back to double digit.
Absolutely.
What about other variable factors? Will they also improve dramatically?
So we are very, very confident about the margin trajectory. Okay. And I'll tell you that it might have some fluctuations. We spoke in the press conference also that there is a significant efficiency push. But the efficiency push is also being accompanied by the use of innovation to change. And the short term, that might or might not result in a negative impact on margin. But in the long term, that will be a win-win for both us and for the customer. And therefore, we believe that the profitability will be higher once we have executed it. During the course of that execution, it is a more dynamic one. And we are very focused. Our instruction to our account teams is where there is a possibility to lead with a machine first model, where there is a possibility to lead with a location independent agile model, where you have an opportunity to actually lead with a product centric operating model transformation opportunity. All such opportunities should be grabbed, and we should be the leaders in executing it. So we believe that is the path, and we are going to occupy that center stage. And that will give us the profitability that we aspire for. Absolutely no thing. I've always said this, and we have, to you also remember that we have had this conversation. Profitability is a measure of relative competitiveness. It is nothing else. So it is important that you take the leadership on what the new age operating model is. Once you have established that, profitability will come. Profitability cannot be achieved by anything other than increased relative competitiveness. The world of tomorrow, relative competitiveness will come from digital capabilities, it will come from automation, it will come from the machine first model, it will come from agile, and those are the spaces where we are investing. And you look at our commentary throughout, these are the foundational pillars that we are investing in.
I must say that every time I've interacted with you, it's a little over 6-7 years now, I've never heard Rajesh that bullish. When was the last time you heard Rajesh this bullish, NG?
The earlier call.
Okay. My follow-up question to you, and it is not about this quarter or on the next quarter. I'm going to look at what markets are telling you, global markets are telling you. You've got Apple at $1 trillion, you've got Microsoft at $1 trillion, Google at $1 trillion. Visa has become $200 billion ever since they've become a platform company. MasterCard is also reaching there. Markets are telling you that the future belongs to platform companies. You're a service company. Will there be a core, will there be any threat to the business model of services in this decade? Anybody can pick it up.
See, I think these definitions need to be seen. Think about, I won't name, but think of an ERP company, right? You form, what is important is that are you an integral part of the value chain of that industry and of that customer? If you are, you have essentially achieved a position from which you can constantly transform. I think these are the positions of increasing value rather than the old lock-in kind of platforms, because the lock-in platforms, you have seen that many of these platforms have got disrupted by new entrants. And then they react to it by putting a lot of equity capital and actually buying them out and internalizing it. So if you are actually a part of the fabric, you are part of the ecosystem, you have earned yourself the right to continuously innovate, and if you continuously keep on innovating, you will be valuable. It doesn't matter whether you are services led or product led. It is, are you integrated and are you a core part of the fabric?
Do you think that increasing? Or that
we believe that we are increasingly that in of most of our most valuable customer relationships. So what we do today, what we do is very different from what we did in the past. It will be very different from what we will do in the future. But our right to actually constantly change is the valuable aspect of it, which is the element of what we call this technology staple kind of a positioning that we're talking of, which is what our focus is on, and we're steadily getting there.
Okay. Now, North America is the biggest market for the Indian IT sector. Last 10 years have been extremely good for A, the BFSI sector, and B, for American economy per se. I don't know what will happen, but if projections are anything to go by, American economy and American BFSI space could hit a base effect. Is that something which you see could be a challenge in next couple of years?
No, I don't think so. I think that's a market where the economy is doing well. There are other factors which are playing out, so that I will leave the economists to worry about overall. But as we see it, the aggregated budgets of our client portfolio in North America is not shrinking, right? And they are holistically adopting innovation. And I think for the first time I'm seeing that innovation is surpassing productivity, right? So with the result that look, more and more of our customers are adopting innovation, integrating fintechs or insurtechs or regtechs or all the other technology companies as an integral part of the value chain. To add to what Rajesh said, that look, we are very much in the game in terms of integrating ourselves into that value chain of our customers. In fact, a lot of our customers look at us as their extended enterprise today, right? So in that context, I believe that we have a role to play. We have the responsibility to continuously innovate, continuously disrupt ourselves so that we are staying relevant and increase our market share, right? And Rajesh talked about over the last 7 quarters, our market share in BFSI as a segment, it has gone up, right? But we are disrupting ourselves to be even more relevant to them and bringing our machine first led offerings in helping them adopt artificial intelligence, machine learning, deep learning, those kind of technologies, whether it is in the wealth area or whether it is in portfolio management or any other technologies that are relevant.
Rajesh, for the first half of this decade or the decade gone by, IT companies were conserving cash. last 3 years, given that there were different laws of buyback, a lot of cash has been given out in form of buyback and dividend. Next, for this decade, what would be the stated policy for TCS? I mean, there's been a big departure in the way you've been rewarding shareholders.
Actually, not Nikunj, if you go back to commentary, and I don't know whether, but in interviews and all, I always said that we need to get to a certain level of absolute cash, and after that we will start increasing it. And so we had said, even when we were distributing less than 50%, we had said our intention is to get to about a 3 billion, 4 billion kind of a cash reserve, and post that we believe that we'll. Why 3 billion, 4 billion? Actually, we benchmarked at that time to where the global peers were, and approximately that is the kind of cash position that people were keeping. We have looked at the literature around it. There is no fundamental basis to say this is right or that is right. So we have picked a number that we think we are comfortable with. Beyond that, we said we will keep on distributing it. And as we went closer to that threshold, we kept on increasing our distribution. And when we crossed that, we started saying that we're going to distribute 80 to 100% of what we earn. So that there is technically no departure. It is just that it has taken us time to get here. But this has been a very systematic and very thought out process. So I think the market reacts to what we were doing versus what we're doing today. But the stated intent and the actual execution path has been a straight line. It has not been a departure from that.
So assuming that comfort number is there, the payout policy will remain as strong.
We have been very, very strong about it. We said we will distribute 80 to 100% of our free cash flow. The only situation is if we were to see an acquisition opportunity that merits it. So this is free cash flow post acquisition. Whatever is not required, we will be keeping on distributing it out. The mechanism of distribution will be the most efficient across the full spectrum of stakeholders that we have. Because we have retail stakeholders, we have institutional ones, some prefer dividends, some prefer buybacks. We will look at whatever is the most efficient one and we will do that. And you're seeing us execute on that.
And just a couple of follow-up and last questions. TCS has always migrated with new technology from Y2K to enterprise and now digital. Digital in a sense gave you this kick, both in terms of growth and also in terms of margins. Is there anything which we should expect in next couple of, not quarters, but couple of years, which would take TCS to a different level? I'm speaking out of experience. The TCS margins with each technology change has only gone higher. Is there something which could be structurally, which you are thinking about it right now, but in next couple of years we'll see it play out?
There are multiple answers to this. I think
we have all the time.
Yeah, one is that the whole digital transformation services that we have launched in the last 3 years, they are seeing great traction in the marketplace. Pricing is better, margins are better, execution scale is something that we are achieving in each one of those transactions. The second thing is that the new products and services identification, development, and deploying those is a lot more systematic today in TCS, right? I'll put it this way, so that we are able to track the market and stay relevant and bring back, our capabilities holistically to launch those things. Third one is, I think the products and platforms and patents is something that's kicking up very well for us, and we have just crossed about 5,000 mark of patents that we have applied for. And a good number of them, more than 1,000 of them is already granted. So the products and platforms is a huge thing, right? Our research and innovation always works on the frontier areas of technology that could be relevant to us, and they have never disappointed me. Whenever I am in a client conversation, if client is asking something, quickly make a call to Pune, our research and facility, and they always have an answer for me. They've never disappointed me in all these 35 years of my experience, right? The next thing that I can see is the edge computing is something that's going to take off, and quantum computing is another one which we are very closely watching. But the important thing is to be aware of that technology, and it's more important to ensure that the relevance of those technologies to solving real business problems.
Rajesh, final question, and I'm really doing a deep dive this time. I'm going beyond quarterly numbers. I'm not getting into year. I'm getting into decades. If law of 72, Rajesh, is that if you grow at 10%, you will double in 7 years. So for us to assume that TCS somewhere in this decade, whether it's 5 or 6, whether it's 6 or 7, nobody knows right now. It can easily double on all parameters, excepting margins, but on top line, on bottom line, it's safe to assume.
Absolutely. See, why are we afraid of size? If you look at the largest CPG companies in the world, if you look at the large companies, sitting in one corner of the world, they built global companies of 100 billion revenue. Why should we be afraid of it? Companies that were built, leveraged brand. Nobody knew that brand was to be leveraged before they did it.
I never thought TCS would be 100 billion. It is there.
Why should not? Why should it not be? Why should we be afraid of aspiring for that? So, I mean, historical context is fine. The question is, what does it take to do it? And anybody who has done it has always done something new to achieve there. Absolutely no reason why we should, whether it is TCS or any other company, just because we have happened to come from an emerging market, absolutely no reason why we should not aspire to be larger than anybody else who has been there. So I think the opportunity is there. You started this question asking about a technology platform company which was kind of formed around the time we were listed. The thing is, if you see a market, if you think that you have a solution for it, can you stay disciplined? Can you be the disruptor? Can you gain that share? And can you execute at scale? That's the question. As long as you can do that, there should not be any constraints to where the opportunity size is. But it is a tough market, which is why otherwise everybody will be a $100 billion company. So the only question is, can we make it? The opportunity is out there. And the challenge is, can we execute?
Well, you've really dismissed your critics with today's interaction. We've spoken about not where the coming year is, but the coming decade is, and how the IT model will revive. So good luck for the year, good luck for the decade, and I loved our today's interaction. We've taken a deep dive not into quarters, but into decades and years. So fantastic. Thank you for joining us, and good luck for the year. Thank you very much. It was lovely.